Be kind of informal. If y'all have any questions at any time, feel free to raise your hand. We've got Renetta, she's a realtor. All her team's here, they're realtors. We have people from the insurance group. Everybody's going to speak. Everybody's going to have time to explain things. So if you have any questions, feel free to raise your hand, ask a question at any time. But today we're going to go through this. We're going to teach you guys a lot about the home buying process. If you don't know a lot about it, there's a lot of things that are misconceptions that people hear. There's a lot of things that you may not know. We're going to try to explain everything, get y'all set on the right path, so when you go to buy a house, it's going to be second nature to you guys. There's a couple things that you can. I always try to look at this as you're an executive trying to build your team, build your business, or you can even say a football team trying to build a championship team. You want to get players on your team that are going to help you reach your goal, and that's home ownership. The first thing you want to do is your service providers. You want to find a realtor that you can work with that understands your goals, what you want. You want to find somebody that you get along with, because you're going to be spending a lot of time with your realtor looking at houses. So you want to make sure that it's somebody that you can, talk to. They understand what you're saying. You understand what they're saying. Once you go in there, and we'll get a little deeper into this, you're going to need an inspection. You're going to have to find a loan officer to get you a loan on the house. Get an appraisal. You'll have a title company for the settlement. And we're going to go through all this stuff. So it's not going to be too overwhelming for you guys. The first thing you're going to want to do, even before you go find a realtor, is get pre-approved with a lender. We actually have applications here today if you guys want to fill them out. I know you've already done it, but if you guys want to fill them out, we will go ahead and take a look at your credit report. I'll do that on Monday if you want, and we'll get you guys pre-approved, and then you can go find your realtor, find everything that you need to get the process going. All right, Dave Ramsey. You've heard of Dave Ramsey. Dave Ramsey's a guy. His big thing, and that's we've partnered with Dave Ramsey, is being debt free, paying off your house, paying off all your bills. Does anybody know anything about Dave Ramsey? Do you guys? Anyway, his big thing is get an emergency fund, and that's huge for buying a house, because when you get into your house, you're going to find that there's a lot of unexpected costs that come up. I don't know if you guys are married or anything, but when you move into that house, your wife's going to want to buy furniture, she's going to want to do landscaping. So there's a lot of costs. So you want to have some money saved up, not only just your down payment for the house and your closing costs, but you want to have enough money there that you are comfortable and you can handle all the things that come with it.
Are we following this?
You can.
Okay.
I'm sorry guys, there's a handbook in here you can go through, and it's going to go through a lot of this stuff, but I'm just kind of hitting the highlights on it. Everybody wants to get that out. All right, now as far as qualifying for a house, have y'all been pre-approved? Oh, you already have? Okay. Did you send in your financial docs, your tax returns, your bank statements?
Yes.
Okay, so you have been actually pre-approved. That's good. A lot of lenders take your application, look at your credit, and say you're pre-approved. It's not something you really want to do. You want to make sure that you get fully pre-approved like you did. I'm sure you did with John. Because you don't want to waste your time going out there looking for a house and find out you're not qualified. You don't want to waste your realtor's time by them taking you all around, them finding you a house, find out later you're not qualified. So I tell you what, I'm going to go ahead and get Renetta up here. She's going to talk to you about the realtor side of this. There's a lot of questions that y'all probably have. Feel free to ask her anything you want to. And then once she gets done, I'll kind of highlight some of the other things.
Hey everyone.
Good morning.
It is a great time to be in the real estate business. It's a great time to be buying a house. it's even a great time to be selling a house. It's just a great time for the real estate industry overall. As Richard said, I'm Renetta Bailey. I'm a real estate broker with RBA Realty Group, and I have my staff and agents in the back. Freddie Robertson is my assistant. Sonia Mockins is one of my agents, and so is Brenda. Good morning. Okay. And we just like to thank you all for allowing us to come in and speak with you about the home buying process. There's a lot to this. There's a lot of agents and brokers out there that are selling real estate, but you want to get with agents just like you want to get with qualified loan officers that can actually, get you pre-approved, understand the process. Because I just recently ran into a couple of, I'll say, home buyers that were first-time home buyers, and they worked with agents who were not so familiar with the guidelines and the principles, and ended up losing money for them as a homeowner. And so I had to come back in and seal the deal, and of course I was able to do that. But what's most important is that you are the focal point of our business. You're the ones that make us thrive and make us be happy at the end of the day, especially at the end of the table when we get to the closing and you sign on the dotted line and we hand you the keys to your new home, and the title company hands us a check for the work that we've done. So with that being said, Richard and all loan companies, they're the first point of contact. But a lot of times people will come to me first. And basically what I do is I'll ask two simple questions. Are you working with an agent? And then the second question is, are you pre-approved? Because as he said, a lot of time is spent with people not knowing where to go first. I even had a lady call me and say, I see your sign is out here. I want to see this house. And I said, well, we're pending. It's going to closing next week. And she said, well, can you show me something else? I said, well, are you pre-approved? And she got a little upset with me because she wanted me to just come and show her the property. Well, I'm like, I don't know how much you're pre-approved for, so I don't want to just come showing you houses. I mean, we're talking $300,000 and $400,000 homes, but I don't know if you can qualify for a $100,000 home. So, that's so important when you start the home buying process. And then once you get into it, I'm just going to step through the next steps once you've already been pre-approved. And I guess what do you call once you get the docs? Once the loan company has what we call full docs, that means that they are actually going through all your paperwork, which I think you gentlemen said that you have full docs. You've actually got a pre-approval letter in your hand, right?
Yes.
And what about you, sir?
I don't have a pre-approval letter.
Okay,
Pre-approved for amount.
Okay, so you,
I guess
okay.
pre-approved for amount.
So you'll
He's
know.
working with the guy in the
Yeah.
office though.
So you'll know once he gets full docs. And basically, that is what that's doing, is telling us, okay, once we get that letter, then we'll know how to go into the system and search for homes that, that's in your price range. Now, you also may get pre-approved or get approved for a certain amount, but you may not want to spend that amount. And that's okay too. It really is. Because, as Richard was saying, Dave Ramsey has put together a check sheet or checklist which will help you budget the amount of money. Because believe you me, you don't want to spend all of your money just getting into the house. Because things pop up. Sometimes they pop up before you even close the deal. So you have to keep that in mind. And it's so important to keep an emergency fund. Ask me. I'm a homeowner, and I know. Got home yesterday, both ACs are out. So can you imagine what I'm going through? So, you got to have some emergency funds on hand. Once you've you've got your docs in hand, and then you've gone out and you've actually found a house that you want to purchase, the agent will got to go into negotiations with the other agent and with the seller to make sure that you get the price that you want to spend for that. Now, basically what I do with all of my clients, it just depends. If I'm working with the buyer, I basically load them up. You know, I load up everything on behalf of my buyers. So they'll know that I'm working as hard as I possibly can for them to get them the most for their money. And also, let me just add, I also serve on the Collins Central Appraisal Review Board. And one of the key things that I bet most of you in this room don't realize is that buying a home has property taxes that's associated with it. Once you get in, that's another added expense that is kind of like a silent expense, but then when the market changes, you'll see and feel the effects of it, because that means your taxes are going to go up. If your house is in an escrow, you'll see, you know, from the mortgage company, you'll see this big hike in your payments, and you'll be trying to figure out, why are my payments going up? I haven't changed anything. Well, you can actually call the lender and tell them, hey, I need to shop around my taxes, and same thing with your insurance. So those are two key things that are associated with your property taxes. But as you all probably seen on TV in Dallas County as well as Collin County, the property taxes are going up this year. They've already gone up, and they're going to go up even higher next year. So just keep that in mind. Now, once you've identified the house that you want, the next step would be to get it inspected. And we have a list of inspectors that we use, but typically we let you pick your own inspector. So, you know, if anything goes wrong, that's who you chose to do your inspection. And they come in generally, they do a general home inspection and a termite inspection. And they'll send that report. If you're buying a pre-existing home, they'll send that report back to we'll send them the report. They'll send it back to us and say what items they're going to fix, or if they're not going to fix them. And you have in that contract a certain amount of days to get that inspection done. They'll hold it off the market until, I'm just going to use for example, 10 days. And typically you pay an option fee. It's usually about $10 per day, $100, which goes to the seller, and they put it under option, active option, until you get your inspection done. And then you decide if you don't want the home at that point, you just walk away. You have to say nothing. If you do, and you want to negotiate which items you want them to take care of, then I, at that point, would send back a list on the amendment of the items that you want to have them take care of. Okay, am I going too fast? I know sometimes I can talk a little fast, so just want to make sure that everybody's following me. Okay, and then once you're out of your option period, then we move forward to the next stage, which is you contact your insurance company, say I have a house that I'm trying to purchase, and I'll just use an example, $200,000, and they'll give you a quote as to how much your HOA insurance is. You make sure that I'm involved, and I'm with you the entire step of the way, from start to finish. I'm in contact with the lender, I'm in contact with the inspector, I'm in contact with the bank or the appraisal, the insurance company, even the title company till we close. And then they still have to pay for the title policy. Are there any questions so far up to this point? Come on, I know somebody has some questions. It's a lot of material, and I'm kind of giving you a high level because it's a lot of the work that we do is behind the scenes. I'm up at 2, 3, 4, 5 o'clock in the morning, working, putting contracts together, trying to strategize how I'm going to structure the contract in order for my buyer to get it at the price that they want. I'll also add that, and this is just a few items that I know that I try to secure. I try to get them to pay all your closing costs. Some will pay it all, but with this being a seller's market, it's gonna be a little tough. So that means that I'm gonna have to stay up a little bit longer to try to strategize how I'm gonna get them to pay all your closing costs. Okay? Because what you guys are doing as buyers now, because the news media is saying that, I know in Collin County, they're saying supply and demand, we don't have very many houses on the market, It's not that we don't have houses, it's just that sellers are afraid to put all of their homes on the market because guess what? The prices are going up. So once they sell, they got to try to find a house. So, it has that ripple effect. So, it's going to be interesting down the road. And we're just getting into the heat of the summer to see what all is going to happen. But it's interesting. So I usually put in the contract for them to take care of all of your closing costs. I'll ask for a 1-year home warranty. I'll ask for them to give you, what else is in there? Pay for your title policy. So those are the biggies. And typically the homeowner does take care of because, and the survey, if they don't have a survey, and in some cases, if the home is older, they may not have a survey. Someone has to pay for that. And these are items that can be shared. You can pay half, they can pay half. So does the title policy. That's one that you can share. So that's pretty much at a high level. You had a question, sir?
All the items which you said right now, like the title, the closing costs and everything, you will make sure that it will be paid by the seller.
I will try. I can't guarantee it, but I will try.
Is it only for the used home or new home also?
New home. Oh,
Any home.
yeah. Any home.
Okay.
New or existing. Mm-hmm. Yeah. Any other questions? Come on. This is so informal. I got so much information and so much energy.
At the time of closing, apart from the down payment, what are all the additional costs you may have to take? Closing cost is
Well, it depends. If you have a conventional loan, and I believe, what is conventional? 3, 5?
5%.
5%.
Okay.
You have to bring that to closing.
We'll get into all that here in
Yeah.
a minute, I promise.
Yeah.
No.
So,
I'm not talking about the numbers. What are all the items that are included, like the closing cost, then insurance?
insurance, yes.
You talking about in your payment?
Sorry?
In your payment or?
Yeah, basically what is the amount that we should bring it to the table?
Oh,
while
he's
closing?
gonna.
Yeah, I'll get
it.
in, I promise you, here in just a second, we're gonna get into all that, okay?
Yeah, he's gonna. So, what about areas? What about areas? What areas are you looking at?
I was gonna ask what areas you focus in.
Well, I work on referral basis, and I've been doing this for like 14 years. So people that I've sold properties to, they know me. I guess I did a good job, so somebody referred them to me, and then it just kept going and going and going. So I kind of like work all over. I have listings in Grand Prairie. I have listings in Carrollton. Just
Yeah.
wherever. So.
That's awesome.
So I'm blessed that, it just turns out like that. That I was able to start out on referral, and that's kind of like how the business was built. Because, now it's like, people are coming to me, and I don't have to go out and do any cold calling and all. I just, and that's why I got my staff now. So before, didn't have them, and so they're willing and ready to go just like I am, so.
That's great.
Thank you. Any other questions for me right now? We've got till 12, so you may think of some other things, and if so, just jot
Yeah, if y'all
them
think of
down.
something for Renetta when I'm up here talking, raise your hand. I mean, an officer's probably gonna tell you, all right, based on your income, I've got you pre-approved up to a maximum of $400,000. So that means you have the buying power to go buy a house for $400,000. Just like she said, you don't want to say, oh, I can go buy a house for $400,000, because if you go to the maximum of your purchasing power, you're just going to sit in that house because you're not going to have any money to go out and go out on the weekends, do stuff with your kids. You want to make sure that you talk to your loan officer about being in that sweet spot. In other words, don't buy at your max, and don't buy the cheapest house you can find, because your resale's not going to be real great on that. You want to, and that's something else you'll work with your realtor on. As you're looking for a house, there's a lot of things to think about. If it's in a good school district, you may not have kids, and a school district may not matter to you, but for resale value, that's a huge selling point. Because if you're in one of the best school districts, and somebody's looking at your house and Bill's house down the street that's in a horrible school district, yours is probably going to become a lot more attractive to them. So, those are the things you can sit with your realtor and think about. She'll talk to you about a lot of different things. Things you won't think about. You may not want to be on a busy street in your neighborhood. You may want to try to get more back towards a cul-de-sac, because if you have kids, you don't want people flying down that street and hitting your kids. You may want to think about having a house that faces north and south versus east and west, so you don't have that direct sunlight coming in. I mean, these are all little things, but after you get into your first, second, and third house, you'll start realizing, heck, I just bought my third house last year, and I remember thinking, I do not want a house that faces east and west, because I do not want that heat in the morning and the evening. We found a house, man, it was nice, it was everything we wanted. Put in a contract. My wife goes, this house faces east and west, don't you? And I'm like, you're right, it does. So, I mean, you get excited through the process, but those are some things, just a lot to think about. Once you get pre-approved and you find that spot that you want to buy, that's when you're going to go with your realtor. Everything in that contract that she talked about is a negotiation. So when you go in there and you negotiate the purchase price, the things that are going to be paid for are going to be your closing costs. There's a survey, there's an owner's title policy, and then if you got the chance for your realtor to negotiate a home warranty, you can do that too. Now in Texas, typically, and this is all typically the seller pays for the owner's title policy, which is what an owner's title policy is. It's telling you that the title company runs a check on this house to make sure that when you buy it, it's free and clear of any liens. In other words, like say you're buying my house. Both my air conditioners in my house, I don't have one air conditioner, but just like her, both my air conditioners went out, and I had a company come and replace those. I didn't have the cash, and I didn't have a home warranty to pay for it, so I was trying to pay it, and I didn't get it all paid. So the air conditioning company put a lien on my house. So when you do the owner's title policy, that's telling you that when you buy the house, it's going to be free and clear of any liens, because that lien will show up on title. So that's something the owner will have to pay for to, get that house to be transferred into your name. However, say I get my air conditioner fixed as I'm selling you the house and I don't pay it. You buy the house, now it's in your name, and somebody comes and puts a lien on it. My air conditioning company puts a lien on your house. That title policy will pay for that. They will pay that lien. So when you buy that title policy, which you may not think you want to get, is huge because it takes care of you. And that's something you want to make sure that you buy a house that's free of any liens, any mechanics liens, judgments, anything like that. And that's what your title policy does. They don't have to fix the pool. That's why you don't build over easements and stuff like that. And that's what your survey will tell you. And your realtor and your title company and everybody will help you with that. But your survey, they cost about $500, anywhere from $385 to $500. That's something else you can negotiate in the cost, and your realtor will do that for you. You've got your survey, title policy, and your closing costs. Do y'all know what it means to roll in your closing costs? To have the seller pay your closing costs? Okay, on a conventional loan, you can have the seller pay 3%. On an FHA loan, you can have your seller pay 6%. So is what they're doing is if say I'm doing a conventional loan and the seller's paying 3% of my loan, that means I can, and the title policy they're paying as well. So when I prepay, because when you buy a house, you have to prepay your insurance for a year, and then you set up your escrow account for your taxes and all that stuff. So say I have $1,000 I'm setting aside for my taxes and $1,000 setting aside for my insurance. With that money the seller's paying, they're paying for your insurance for a year, they're paying for your taxes. So in other words, that's money that you don't have to bring to closing, okay? So once you negotiate that, yes ma'am,
I have a question. What about VA?
VA, you can do 3% on VA.
Okay.
And there's a little sheet in there with all the loan programs, and we'll go over that too. But those are your negotiations. Once you get into your loan, and you've already got a contract on your house, you're going to bring your down payment and any closing costs. All the closing costs are yours. They're your closing costs. Now, if the seller pays them, that's just less money you have to get. So, say you're buying a $200,000 house, and you have the seller that's going to pay $4,000 of your closing costs. So if you're putting 5% down, that's $10,000 that you're bringing, and then say you have $5,000 in closing costs. So you're bringing $15,000. They're paying $4,000 in your closing costs. You're only bringing $11,000. So you're barely bringing anything more than your down payment. It's okay.
Your screen went dark.
Matters.